Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 26th of January, 2021. Today, it is episode number 1924. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Again, good morning from an overcast, very snowy day here in Chicago. Our first big snow of the year. About I don't know, looks like 6 inches or so, 15 centimeters. Here's what the pre market summary sheet from Convergent Trading is saying this morning. There's an allocation to risk from the European markets. We'll see in a minute that from the time the Europeans opened their markets, they have been trending up. We have breached the all time high in the overnight session. The all-time RTH high, but we remain below the all-time extended trading hour high in the S&P. So overall, allocation to risk, Russell leading the pack today for the U.S. markets, followed by the Dow, and then the Nasdaq, and then the S&P with the Nasdaq. At that point, well, it's moved a bit, but at that point it was unchanged. You can see that the 10-year and the 30-year are flat or neutral. The bunds are down at that point. Money's coming out of the US dollar, going into the euro, and the British pound, the cable leading the pack there in the currencies. In terms of what was released overnight, there was a lot before the market. Johnson & Johnson announced its earnings came in at $1.86 versus $1.82, a surprise by 2.2%. However, revenues surprised by 3.71%. General Electric also announced its earnings, and it missed the earnings by a penny, came in at 8 cents versus 9 cents, a surprise of 11% down. But the revenue number was higher, 21.928 billion versus 21.83. Overall, the free cash flow estimates are higher for GE, and Johnson & Johnson promises new vaccine data soon. Johnson & Johnson's vaccine is expected to be a single dose vaccine for COVID-19 and also effective for the variants. So that's where we stand overall. The market is higher, very thin profile this morning, multi-distribution profile. You can see the overnight volume was at 205,000. It's currently at 209,000. Overnight inventory is short by about 44%. And falling with a range of 35 and a quarter points. That's where we stand this morning in terms of what's expected. Well, in the overnight session, we got claimant count, which came in very strong for Great Britain. Case-Shiller came out relatively strong. This is our home price. This is a home price index, 9.1 versus the consensus of 8.6 and a forecast of 8.1. We're expecting the CB consumer confidence to come out at 10 Eastern with a number of 89, and the API oil stock change at 4:30, expecting 0.603 million. This evening for Australia, NAB business confidence at 7:30 Eastern, and that wraps up the day. I want to remind you that tomorrow there are several key numbers. So one is the GfK consumer confidence out of Germany, durable goods orders out of the U.S., and then the Fed interest rate decision and press conference tomorrow at 2 Eastern and 2:30, expecting to hold steady. So the market is going to pay attention to that news coming in. So that's where we stand this morning. We are, again, the inventory, a lot of the volume was below yesterday's close, so the inventory is about 44% short. But the market is higher, so over time that's likely to be neutralized immediately on the open. So the inventory is not really in play today. In terms of what was expected yesterday, the primary scenario was expecting a push up into 45, 45, 47, and then for it to roll over and potentially test the 22. Yesterday, I was reading yesterday as basically an attempt higher and a fall. To continue the trend that was in the overnight session. Remember, yesterday I said that the expectation is that there'll likely be some movement on the open given the context of how we started, how we were trading in the overnight session. So again, the plan was look for a push higher off the open, look for it to push into 45, 47, and then look for a test of 22 before the bounce. Well, it did a lot more than that. We opened and pushed to the 47 right away, but we turned around and went up to 52 before it looked like a news event. It looked like a news move in that we had a really large impulse, a relatively large impulse from the recent past at 1750 down with a very small pullback to the IB, right to the IB. A continuation, which also had a pretty wide range. And then it pulls back where? It pulls back to the prior low, if you recall, the 22, 23 area. That was the initial target for scenario one. And then it executes another impulse. So now we're looking for a pullback continuation. The pullback was expected to 38.09, got to 38.06, and then it finally ended up going down to the 37.94 MC point of control. I mentioned the key levels below, and I said the extended target is 37.94. It actually breached that, went to 88.5, and then we started to see a counter impulse. And those of you who are in Convergent, I warned that if you are short or looking to be aggressive short, you need to take notice of the large impulse up, in that we shouldn't be surprised to see it back at 22 right back here. And it's kind of walked itself to the mid, finally breached, chopped around, and then continued to walk higher. So what this was is a sort of a V bottom in the big picture. So if we look at the 30-minute, you can see here on the 30-minute, the test higher, and then boom, it falls. And what do we have? We have an excess low. I'm not sure why this is not accepting these commands. We have an excess low. You can see this big wick on the 30-minute and very, very thin volume on the profile. So this is a caution to people looking to get short. And it starts to walk itself up, and we end up going right back to the point of control of the session. So really, really a clear test into the prior MC point of control and rejection back to the top of the range. This is a there was, I didn't see any news. In fact, I asked one of my news feeds if they missed something, and I went back and checked and reported that there was nothing missed in terms of news. This looks to me like a technical break lower. I mean, with the run up that we've had, this looks like just a stop run. But overall, what do we learn from this? We learned that the market tested lower, found unfair prices, and moved up very quickly back into balance, back into prior balance. And this really blew out the shorts yet again. So it's better to see it on the RTH, the composite chart. Here's the composite chart. We break, we fill in the gap, right, from 38.14 or so all the way to 37.96 or something. But what we did is we moved right into This high, look at these peaks on the volume profile. This just beautiful stuff here. Nice peaks. That's going to turn into a box. There you go. And you can see that the market fell all the way down to the key acceptance in this area, 37.94, and it came right back. And what we end up with is this kind of a hammer pullback. And where do we finish? We finish right up against last week's point of control, which is 45, 38.45. Very methodical. The sell-off though was pretty decent. I mean, it moved very quickly. Relatively easy to read, in my opinion. So overall, pretty decent break. But where does it break to? It breaks to the MC point of control. Of course, it pushed through to 37.88. Didn't stop dead in its tracks at 94. But for a drop of that magnitude, it did pretty good, 60 points. It stopped right at the MC point of control. That's an important point to make. Look at the liquidity or the relative volume. So I haven't shown you this chart in a while. This is a 1-minute chart of the ES, and this breaks up and consolidates the prints. So what this software does with the feed that I have with IQ Feed is it takes and it reassembles trades. They're not guesses. They're based on the tick ID tag sent from the CME, and it reassembles these trades. And what I do in this chart is I split them into small lots. The white is large lots. So small lots, anything below 9 or below contracts. Large lots, large lots are 10 lots, 10 contracts to 99 contracts, and very large lots is 100 lots or greater. And what you see is from the get-go, the very large and large lots were sellers. So right when the market was kind of sitting sideways against the open, you could see that the large and very large were selling to the small lots. And then once the break happens, everything kind of falls off. So we see the very large and the large lots falling, but not as much as the small lots. So this was a kind of a shakeout of the smaller sized trades, or the aggressors here. The stops were run by small lots. Lots, again, size is 9 contracts or less. But then as the market starts moving back to the open, so now we're back at the open, we expect the market to be back at 0. You can see that very large lots did not participate at all. This was completely flat. Very large lots, and the large lots were pretty much flat. Pretty much this whole run up is done by small lots until the close, where the large lots come back in. Very large lots participate a little bit. You square up for margins and things like that. But really, and that's right at the cash close right here. This is kind of normal that it rebalances. But really what's carried this trade back up is the small lots based on yesterday's action. So very, very interesting. The reason I thought this was a news-based move, when we look at the relative volume, this is the relative volume on a 30-minute bar chart. Each one of these bars here, represents the actual. The black represents what the volume would have been over the last 20 sessions on average versus what it actually was. And you could see that during the break, this yellow is not a good color, but you could see that down here, the expected average volume was a whole lot less than the actual. This is why I thought, hey, something's going on here, some news somewhere, but it turns out it's just basically a liquidity kind of rebalance. It seemed more technical than anything else, but it's important to note what we tested here and what we rejected and to immediately recognize that, hey, we've crossed through that gap. We went to the MC point of control, and we ended up at the 45. The only way is up, baby. That's basically what it's saying. We tested and we found buyers. So we found buyers. And so what is likely to do, like I wrote in the Convergent chat room last night, I said ES came back, right back to the VPOC and above the MC VPOC after exploring prices below 3,800 and after even testing the MC VPOC at 37.90. This is a clear rejection of lower prices and is the reason I expect this to continue to go higher. Lately, we've been selling off overnight and buying up on the open or vice versa. This morning, ES is now higher as expected, anticipated, but not without dipping deep down into the 38.22 area, which I highlighted from yesterday's action. Remember 38.22? There it is, 22. That's where we dipped to overnight. And the extended trading hours high is 59.75. The overnight high is 56.75. Therefore, expecting this to continue higher. So this is reading the narrative. This is where reading the context and the narrative of the market is really important, and that's where we're at. So anyway, a lot of detail there. Just wanted to go through it to make sure that you know what's up and how the story is playing out and the reason for today's play and what we are seeing currently. So let's move to the current situation. Today's plans, today's trading plan, we are essentially balancing. Let me pull up that chart, just 1 minute. Balancing the overnight inventory here. Let's look at the overnight inventory. The overnight inventory is negative 29%. You can see that the market is balancing that overnight inventory. I don't think it's going to be relevant. The overall expectation is we open and we immediately continue to squeeze higher. I don't think the market is going to rebalance to the downside. I expect it to push higher. We have new all-time highs on deck here, and nothing above us. I expect us to just continue to squeeze. We're opening in a small gap. There's a small gap to yesterday's high right here. I'm looking for it to stay open, and I'm looking for this to kind of work through this gap zone. The next key area up I have is the 38.79 measured move, and that's all I can look for today. New all-time highs. Tough trading for profile type traders, so it's really just looking for pullbacks to buy. That's scenario one. Scenario two, if the market finds an excess here, remember, as it's pushing highs, it's been doing so on weaker delta, weaker participation, more the offers pulling than the bids lifting. That makes a really big difference. It's an important concept to understand how the next tick, uptick or downtick has occurred. Price alone doesn't give us a story, people. Price alone gives us just a small portion of the story. We trade price, but volume is what tells us what the intent is or what the aggressor is for that particular price, and that's why we use volume profiling. You can see the overnight session has a profile that's very thin, so we have active price discovery, so I expect the open to be active, as relatively active as well. The secondary scenario is an open that squeezes higher and then finds the price where sellers are likely to step in, gives us an impulse down, and it's most likely going to come back. If that happens, it's likely to come back to the MC point of control from this week and last week. Hold steady here into the Fed announcement tomorrow. So it's really hard to predict where this thing is going to end up as it balances out. But don't be shocked if it pushes all the way down into yesterday's close, last week's close at 33, with 45 being the key test area. And then here, it's anybody's guess up to the 38, 78, 79 area. So really hard to predict, but my um, my view is, look, with all the information that we have, we've had good earnings, and there's a 1999 2000 style bubble market in the techs. If you look at GameStop stock, if you look at the IPOs and everything else, it's a very bubblicious. And to me, it's likely to drift up until it finds a seller. And if it finds a seller, it is very easy for it to pull back, but I don't expect it to run very far. I don't expect this kind of a move from yesterday. I'll leave you with those thoughts. I'm going to run off and prepare for the market. Hopefully, you are doing your own homework. You're taking the steps to trade right. You're journaling, you're tracking, you're logging, and seeing where the weaknesses are in your trading plan so that you can truly trade like a career professional. And this Trader Bite is my effort to help you move in that direction and think of the market as a continuous auction and a continuous price discovery mechanism, that's telling a story. And it's our job to align ourselves with the story, not predict it, but align ourselves with it, and take the trades with defined risk that may play in alignment with the story. Good luck, and I'll catch you tomorrow morning. Take care.